Add banker property and casualty comprehensive exam. Welcome to the quiz. Which of the following is an example of absolute liability? Is it A, a driver running a red light? Or B, a store owner failing to clean a spill? C, the use of explosives causing damage regardless of negligence? Or D, a dog bite? The answer is C. Absolute, or strict, liability holds a party liable for harm caused by certain ultra-hazardous activities without needing to prove negligence, like using explosives where any resulting damage makes them responsible regardless of care taken. Red light or spill requires proving negligence. Dog bite often strict in some states, but not universal absolute like explosives. Next question. Which of the following is covered under coverage E of a homeowner's policy? Is it A, personal property? Or B, medical payments to others? C, personal liability? Or D, dwelling? The answer is B. Coverage E is medical payments to others, paying reasonable medical expenses for guests or others injured on premises regardless of fault, no fault small amounts. Personal property is C, liability C, weight coverage E, medical, F, liability in standard HO. Dwelling A. Next question. What is the purpose of the employer's liability part of a workers' compensation policy? Is it A, covers statutory benefits required by workers' comp law? Or B, covers employee lawsuits outside of workers' comp law, such as loss of consortium? C, covers independent contractors? Or D, covers customer injuries? The answer is B. Employer's liability, Part B of workers' comp, covers lawsuits by employees for work-related injuries outside the exclusive remedy of statutory workers' comp, such as when gross negligence or third-party claims allow suit, including spouse loss of consortium. Part A covers statutory benefits. Independent contractors and customers separate. Next question. An insured has a personal auto policy with 25/50/25 limits. They cause an accident injuring 3 people. The court awards $30,000 to person A, $20,000 to person B, and $20,000 to person C. What is the total amount the insurer will pay for bodily injury? Is it A, $50,000? Or B, $70,000? C, $25,000? Or D, $30,000? The answer is A. The 25/50/25 means $25,000 per person bodily injury limit and $50,000 total per accident for bodily injury. Even though damages total $70,000, the per accident cap is $50,000, so the insurer pays up to $50,000 total for all injuries combined, regardless of how many people. The per person limit caps any single individual at $25,000, but here person A gets $30,000 award, but insurer pays only $25,000 for them, then $20,000 each for B and C, totaling exactly $65,000, but capped at $50,000. Option B, $70,000 exceeds the policy limits. Option C, $25,000 ignores the per accident total. Option D, $30,000 is just one person's award, but not the total payable. Insurers pay up to the per accident limit when multiple people are injured. Next question. An insured's vacant commercial building is vandalized. The policy has a vacancy permit endorsement. How does this affect coverage for vandalism? Is it A, vandalism is fully covered? Or B, vandalism coverage is excluded after 60 days of vacancy regardless of permit? C, the permit waives all exclusions? Or D, coverage is reduced by 50%? The answer is A. A vacancy permit endorsement modifies the vacancy clause to allow coverage for vandalism and sometimes other perils during extended vacancy periods that would otherwise be limited or excluded after 60 days unoccupied. So with the permit, vandalism remains fully covered as long as within permit terms. Standard vacancy excludes vandalism after 60 days. Permit does not waive all exclusions, just vacancy-related ones. No automatic 50% reduction. Next question. A homeowner has a replacement cost policy on their dwelling. A 15-year-old roof that would cost $10,000 to replace today is destroyed by a covered windstorm. The roof has an expected useful life of 25 years. Assuming no deductible, how much will the insurer typically pay if the homeowner immediately replaces the roof? Is it A, $4,000? Or B, $6,000? C, $10,000? Or D, 0? Roofs are not covered? The answer is C. Replacement cost coverage pays the full current cost to replace damaged property with something of like kind and quality without subtracting depreciation, but many insurers apply depreciation recovery rules especially for roofs. For a 15-year-old roof with 25-year expected life, the roof has used up 15/25 or 60% of its life, leaving 40% remaining useful life. Insurers often pay the depreciated portion immediately and hold back the remaining 60% until actual replacement occurs, but since the question says the homeowner immediately replaces it, the full replacement cost is paid after depreciation adjustment in practice for many replacement cost policies on older roofs. This means the insurer pays $6,000, 40% of $10,000, upfront or effectively that amount in net after holdback logic, though full $10,000 is possible in pure replacement without depreciation holdback. Option A, $4,000 is too low because that would assume even higher depreciation like 60% paid or miscalculation of remaining life. Option C, $10,000 would be correct only if no depreciation applies at all or full recovery without any age consideration, but typical policies depreciate roofs based on age for partial holdback. Option D, $0 is completely wrong since windstorm is a covered peril and roofs are part of dwelling coverage under standard homeowners or dwelling policies. The key is that replacement cost aims to avoid depreciation penalty when replacement happens promptly, but roof-specific schedules often result in partial payment like 40% remaining life equaling $4,000 to $6,000 range, with $6,000 being the most common effective payout in examples for 15/25 life. That's it for today. Don't forget to like and subscribe. Tell us how many you scored out of 6 in the comments, and let me know what topic I should post next. Bye!